What's up everyone, it's your boy Seven here, and I want to show you how I managed ES today. Now today was a trending day, so it worked out exceptionally well. And most of you, if you've been listening to me for a little bit, you'll know that I don't trade the opening bell because of the volatility involved. Now today I actually took advantage of that, and I'm going to show you how. You can see we had this pre-market low here, this pre-market low here, so that was a support level there. So let's just go ahead and draw that line in there. So as we're opening, I want to see what we do at that line. Now normally I like to trade if we break a support level to the downside, but again this was too fast into the opening bell. As you see, right when we opened we dipped below that level. So I'm not going to trade the short in that time frame because it's just too close to the opening bell. There's a lot of volatility going around, so anything can happen. And my statistics of trading the opening bell are bad, so I just don't trade it. But what I do trade in this case, this was a very solid support for the pre-market. Once we broke below that and reclaimed that level, that is a trade for me. So I actually went long at 5057. That line here, you can see over in the corner here, is 5056. So I got long pretty much as soon as we reclaimed that line, as quickly as I could get in, and my stop loss is going to be this down here. This is 5052. So you can see, getting in as close to this line as possible. If I'm wrong, I'm only taking a few points worth of a loss before I know that I'm wrong and I want to be out of that trade. So that loss won't hurt my account. In this case, it worked out. So what I did here was I also had a level on this pre-market high here, which was also a resistance level here. So what I did was enter as soon as we reclaimed this level here. We lost it, reclaimed it. I got in at 5057. This candle here, you can see, I might have to zoom in a little bit. So let me zoom in. This candle hit that pre-market high and pulled back a little bit. The next candle came in red. So I actually closed most of the position at 5064. That was a 7-point gain. And that was a very quick scalp. That only took a few candles. So what I did was leave just a single contract open. Now, in a case like this, obviously I wish I left more open, but my strategy, the way I'm comfortable trading, is to close most of the position and just leave one contract left for a runner just in case we are going to get a trending day. And this day is exactly why that's important. So once we get to this level, we reject, we break through it. On the one contract that I'm holding left, my stop is break even. So I'm going to let it play around a little bit because the amount of the trade that I took off the table already generated enough profit that if I let this one go back to zero, it's not going to hurt me too much. I don't like to see profits disappear, but I'm willing to let that one last contract kind of run around a little bit, give it some wiggle room to see if we're going to get a breakout, because on days like today, you can see how much that pays off. So the first trade was 7 points for the bulk of the position. You can see it reached this pre-market and rejected, so that's where I closed it, and I just have a single contract open at this point to see what we're going to do for the day. And I've put out another video that shows how to bump up a stop, and that's basically what I used today. And I'm going to show you how I managed this one. So remember, we're only in a single contract at this point, but we're going to sit through this chop just because, again, the stop is way down here. I'm not going to move it up just yet during this chop. Once we climb out of this kind of consolidation area, I'm going to put the stop down kind of this breakout point here. So once that was a resistance, I want to see if that ever comes back down to test it. I want to see if that holds as support. So that level there, 5065.75, you can see over here, that's where I'm going to place the stop. I'm actually going to place it just a little bit below that because if it wicks that and comes right back up, I don't want to be taken out of the trade. Remember, the bulk of the trade is off the table, so this is just a runner at this point, so I can afford to give it a little bit of extra room. So we're in the runner here. We come back to the same area where we were consolidating here. That holds and we go on a run again. We can pull back a little bit and then we start going on the climb for the day. Now, you can see two lines on here. This yellow line is the 34 EMA. You can see we breach it a little bit, come back, breach it, come back, breach it, come back, held that time and breached it there. So I'm using that 34 as kind of a guide for me. On a 15-minute chart, it pretty much touched those points exactly. So that's kind of my guide there. The 8 EMA here is something I'm watching for a shorter term trend. You can see when we got into this portion of the day, it just kind of hugged that 8 EMA. The trend line, however, once we saw this point here and these points in here, that's where I drew the trend line. So I gave it this chop. Remember, this is the runner, so you're going to give it a little bit of extra room. So once these 2 points developed, that's where I drew the trend line. Once it bounced off of this level, I was pretty much comfortable holding on to this position unless it broke this level, which you can see it did way over here. But before we even get to that, so that's a trend line that I'm looking at. Now, if you've seen one of the other videos I did about bumping up the stop, this is how it worked. So the first stop was going to be down here where this consolidation was once we broke through here. Once we break up and retrace, that low point there is where I'm going to put my exit. So not exactly at that point, because again, you don't want to wick below it and then come back up and be taken out on a wick. So that's the low point there. If we break below that, my stop is going to be a little bit below. Once we start making these higher highs and higher lows, that's where I'm going to bump the stop. So once we break this level of resistance, you can see we retrace. Now we're down here on the retrace. So that's going to be my stop, and I'm going to erase this one. So once we make a higher high and pull back again, that's going to be my new stop. So I'm going to put a line there, and now I'm going to erase this one. We make a higher high, we pull back again, and then we bounce. So that's where I'm going to put the next stop, and I'm going to remove this one. So as we're climbing up on a trending day, each time it pulls back a little bit, wherever it stops on that pullback and then makes a higher high, that's my new stop. So we made a higher high, we pulled back, and then a higher high again. So on that move, we're going to bump the stop to that point. So as we're trending, all we're doing is moving the stop loss up and up and up so that we're protecting more and more of the profits. So we made a higher high, we pulled back, made a higher high again. So the low point there is where I'm going to place the stop loss, and I'm going to remove that level. This level is 5100.75. Now 5100 is a nice even number. You can see this candle right here, the resistance of that candle, that was 5100. So now, using this method of bumping up the stop, 5100.75 is the latest area to close. We went on a nice run from there, 5107.75, so we gained 7 more points, and then we started the pullback. So since this level here was a nice even number at 5100, and this level that I had was 5100.75, I decided to place a stop at 50.99. So basically just under that nice round number. And on this pullback here, that's where it stopped me out. So 5057 to 5099 on the runner contract, that's 38 points. That is a solid trade. I will take 38 points any day. And the reason that worked is, if you guys have been following me for a very long time, you know that I used to close trades immediately. I was the king of selling something and then watching it run that 38 points without being in it. So what's helped me is the runner theory. So again, this broke that pre-market support but came right back in it. So I got in there, then it hit the pre-market resistance level and retraced, so I closed most of the position right there. I only had a single contract left to handle all of this, but that one single contract gave me 38 points, whereas if I just hit this level and closed the trade, I would have missed this whole run. And then throughout the day, I'm trying to figure out where I can get in. It's still climbing, it's still climbing, it's still climbing. Where can I get in? So to avoid having to chase and having to figure out where to get in, I'm going to close most of the position here to secure the profits, but keep one contract open and give it wiggle room all the way back down here, where I'm willing to let that one go back to break even because the other contracts that I closed secured the profit already. So having that one runner and having secured profits kind of allows me to sit through some of this chop, which a year ago or 2 years ago, I never would have done that. If we're way up here at 5079 and retrace all the way back here to 5067, I would have closed somewhere in there previously. But over the years, I've learned that holding on to this one runner after you've already secured the profits at that point, I'm willing to let that one runner come back down. Whereas if that was my only contract, I wouldn't be willing to let it come all the way back down. Hopefully that helps. You can see how I manage the trades and how I bump up the stop. And on a trending day, it works beautifully.